Good morning. Good morning, YouTubers. Sorry about that. We got you punched up live here so you can see the open on a Monday morning. Always a little chaotic on Mondays. The little strategy we have running, one, we got ourselves a little head start from last night's trading. We have Sunday nights. Monday mornings are always chaotic. You have a lot of people eager to get in. They want to buy. You may have some people from Friday that want to get out. So it'll be, it'll be um, frothy maybe at the open, and we have another system that can trade what we call the opening range. We call it the opening T-ball. We have that under view on another system, and we'll be taping that. It won't start trading. Well, it's tracking the range right now. As a matter of fact, it just started about 7 minutes ago. If you have any questions as to who we are, what we're about, you're welcome to visit the site, your website. You're welcome to email us your questions. If you still have questions, you can reach me just about any time, including the weekends from what do we say, from 9:30, 9 o'clock, 9 a.m. to 9 p.m. 9, yeah, not 9:30, 9 to 9. Had to think about it. 813-758-8263. Swing Machine has them buying it a little bit that it's tracking. And we're to the good 706 from last night. This position is down a little, and the strategy running is what we call HFT2. Now, it's not set real fast. It's not going to, we don't want it to trade too fast here this morning. So let us know. Enjoy the show, and we'll see where they want to take things in the first hour or two. So we got about 3 minutes before the market opens. We've had a slow drift to the north here before the open. We got 3 minutes to go. It will be chaotic for sure. Let's see how the little HFT does. Swing Machine's going to do its thing. We're not suggesting anybody take any of these trades on YouTube. We will do these little live YouTube sessions just to show you who we are, what we're about. We're not trying to demonstrate an outcome. We're not trying to suggest that everybody should do this. We're not, or that we're not making any claims. We're a mentoring site for those folks that want to work like ourselves to become more and more mechanical, robotic traders and hedges. We're using machinery to get in and get out of this market, hopefully as early in the day, in the week as we can, and get on out of here. Try to create a little cash flow. Enjoy. We'll see what happens here. Market's always a little volatile around the open, especially on a Monday. If you have any questions on what it is you're seeing or watching, don't hesitate. And I'm not suggesting anybody take what they perceive to be a trade here. That's not why we do what we do. Not a good idea. That position that is in the upper left-hand window, though, is being run by a trading robot. The little minus sign in front of the N means that it is short. That position has had a drawdown of 1,050. It's had a run up of $535. It's currently down about $80 and $90. The 706 window, that is the profit from last night. Yeah, the average winning trade on this strategy is $948. Um, it's early in the week, so we might want to be fairly conservative here in I will intervene and capture this trade. We're gonna probably should have caught it a little earlier. We'll bag it, put it in the boat. Now the robot is still running, so we did intervene. We didn't get all of it, right? We probably could have done better, and we did it purely just on what the average payout is. Now it may stay. If it stays in its short position, we won't be participating, but hopefully we'll get the next one. So we're both mechanical and robotic traders, right? We don't have to be locked in cement in either camp. It's critically important that you have good mechanical skill, you have an awareness of where your account is, not so much every individual position, but the account, and want to try to keep it moving forward. We don't have to do this all day, right? But it's early, so we'll be a little more patient. We don't want to be here on Friday. We don't start our trading week on Fridays. It's not wouldn't be a good thing. Those of you that are passing through on YouTube, again, you're welcome to visit the site, and you're welcome to give us a shout for any questions that you still might have. Markets very mixed, not unusual for a Monday morning. A couple of things of note to us. We see weakness in the Russell, which is kind of interesting because the Russell many times, but it's early, can be a risk off, risk on sign in and of itself. We see weakness in the NASDAQ, of course, but we also see weakness in the VIX here. Still early, right? So I don't want to bias anybody, but I have a little bit of a bias here on what might happen, but I'm not going to trade my bias. I'm not going to trade my gut. I'm going to, for this morning, I'm going to let HFT2 do his thing, and I'll try to trade around it. Those that are passing through on YouTube, this is Swing Machine. It isn't trading today, but it is guiding us in influencing our decisions a little bit as we run just one robot on one market with one mini. The signal comes in here. It's either short, long. It's either in a dip or a rip. It's one of the four. These numbers here are not contracts. They're, for instance, it's time. It's a shorthand for time. It means that the ESU has been short for three 1-minute segments. Right? That's what that means. It's just shorthand for time. If we want to know the exact time, we can come over here and get the clock. It saves us from having to do that. So we can get an idea if something's been long in the tooth. For instance, the Dow has been on a 5-minute interval, has been long for 17 5-minute segments. Otherwise, I got to come over here and say, oh, it's 8:45. And then I got to look at my watch and clock, and it gets a little cumbersome. So we like to know how long something has been long or short and tell us. So for instance, here on the Russell, it's been short for 45 1-minute segments or 45 minutes since 9:18. This calculates the purse, and this is on a futures contract, which is leveraged. Now we can designate sorry about that. So this is 30, the NQ, for instance, 30 minutes short. What I was saying is that the purse is calculated based on the futures contract, but we can do this with stocks too, right? So you would just go into the program up here, Swing Machine program, edit it from futures to stocks, and put in, the number of shares that you're trading, or better yet, a block of money. This gives us the entry price. This gives us the time, and of course, this gives us the date, which is primarily all today. This gives us the trend information, the ball direction. We want to see that, obviously, if we're short, we want to see that red. It can also tell us if something's pressuring up or pressuring down. And then the ball flight itself. Now, this little section here is the most sensitive, and it's very sensitive, actually. It can really pick up on buying pressure and selling pressure. Now, one can get very adept and can be trading any aspect of Swing Machine. We have some very basic approach to trading it, trying to keep it really simple. So we're not going to get into too much detail here. And then this tool over here tells us where we are on the basically a risk curve. Now, on a daily, on the larger time frames, this becomes more valuable, but it can be traded. This also can be traded in and of itself, tells us where we are. So virtually, and we do have many members that will trade purely from Swing Machine. Never have to look at a chart. So if you're looking at chart, and sometimes people can get what we call chart blindness. They can't tell up from down, down from up. And, they're just focused, just too close, got their, they say, it wasn't my analogy, but I heard somebody say that, if you get too close to the butt of an elephant, you're looking at the butt, you can't really see the elephant. You have to back up, and then suddenly the elephant comes into view and you're looking at the butt. So you can get too close to a market, right? You can make it too tight. And we talk about the resolution. Most beginning traders trade too tight and trade too big, too much leverage. We see it and too frequently. It's not a good combo. But that's what Swing Machine is doing. We have view on it. We're running a trading robot that's called HFT2. Annual members can reach out to us anytime. We'll tell you exactly what the settings are. I don't have any profit targets on it, so I'm just running it broadly. And I've got it pretty loose. I wanted it loose. Meaning I didn't want this thing trading too much, even though it's HFT2, which is supposed to be high frequency trade, acronym for high frequency trading. We can make it quicker, we can make it slower, and it's running fairly slow. This is what we've done. And this is just a reminder, just a little reminder, there are 24 trading days in a month. We almost never want to be trading on Friday. If we're trading on Friday, it's just Friday morning, and it's just to add a little something on top, a little cherry on top. We're not doing a lot on Fridays, one way or the other. If we've hit our weekly goal, we're definitely, going to be done. And if we haven't, we're probably also definitely going to be done. We don't want to be trading on Friday. It just isn't, it's just better to go into a long weekend. And so if you back out the 4 Fridays and you trade on Sunday nights, which are very nice time to trade, markets have a tendency to make a particular move and then just kind of follow it through, as it did last night. 20 trading days. Now, I really don't like breaking it down per day. I don't, this isn't, how do I put this? It isn't, the market isn't that precise, right? We could do a lot more, we could do a lot less. I mean, but in perspective, $100 a day is, $2,000 a month if you back out the 4, so you can go there. But I wouldn't come into the market necessarily trying to say, I'm gonna, shoot for a particular money goal, because if you become money focused on each individual trade or each individual day, then you can let the greed and fear slip into you. I am aware of where we are, casually aware, right? So hope that makes sense. You're welcome to visit the site. We'll let this run. We've been doing quite a bit of the YouTube during the summer months to give folks an idea. We get into the fall, we won't have the probably the time and the resources. We expect the volatility to really pick up, and we expect the volatility going forward in the next year to be really high, which is nirvana for a trader. It'll just be trading nirvana. Great time to learn the game. The strategy is still short. We scalped it, right? We disengaged the robot and took a profit. We could have probably done it a little quicker, but it's still in that position. If it goes long, it should put us in. So we've got a casual eye on it. For those on YouTube, it's really important to stay disciplined. And if you have a daily goal in mind for your account and you hit it early, you need to be prepared to stop, right? To leave. And time in the market, money at risk is a risk parameter, right? It most definitely is. We can do things to get a winning percentage really high. But if a person stays in the market too long, then it won't perform. But we can get a really high winning percentage, and then you couple that with staying in the market very briefly, just coming in and hit, and you can do pretty well. I am somewhat amused. These people have thousands and thousands of followers, and they're on the Contrarian News Bubble channel. There's a gentleman, Carter Worth, seems like a hell of a nice guy, and he's famous for just coming in and he'll draw these trend lines. He was talking, 3, 4, 5 months ago about how we were, in a real bearish phase. We've been anything but in a bearish phase, right? We drifted up, drifted up, drifted up. And now he comes in today. I saw it on the Twitter sphere, and he's got his channel and he's once again drawing the trend lines. Trend lines are very deceptive, and I think therefore he is deceptive, because what happens is they redraw. We can get the machine to draw our trend lines. You don't need, we can get them to draw them automatically, and the machine will keep redrawing the trend lines. So if you're trading trend lines, you better be flexible. And so it's just kind of amusing to me, and they got him out again now, and he's saying, oh, now we're up at the upper end of the channel, and we're going to therefore go down 9.3% down to the bottom. Oh, maybe we do, and he's right, but maybe not. Prices could continue to ride the upper end of that channel. There's nothing. So you got to be careful with that. And then also the time frame, right? On CNBC, everything is a daily view, right? Which means, it could be 20, 30, 40, months. The further out we go when we're trading, if we're trading on a daily basis, we're going to use, our margin is going to go down, if completely away. We will define our risk using options. New traders will, they'll use, a lot of margin going further out, and there's a lot more can happen. There's a lot more risk. So we want to trade. So we'll use more leverage on a shorter period of time. And then, again, getting out. Operative word there, getting out. And some of these robots, now this robot's going to play one side or the other, but we can program in other parameters to exit. Could be on a whole host of things, and limitless possibilities, and we'll program such things for our members as well. So any case, as last Monday too was a pretty mixed day, as I recall. So it's definitely summertime, and we'll see what they want to do. Historically, August can be very quiet. They're out of the Hamptons. They're up at Lake Geneva, or they're out at Martha's Vineyard. But you know, we think on a daily basis the markets are pulling in. And be aware, at the end of this month is the J-hole, Jackson Hole, Wyoming, where the central planners around the world, the Marxists, will meet out in Jackson Hole, and beginning, and they can sometimes, publish something that could be market moving. So you want to be aware. If this market was to turn down, during this month of August, and turn down 9 to 10% before that Jackson Hole, I would expect some sort of proclamation to come out of Jackson Hole to indicate that they're going to ease up on the rates. I'm inclined to think that they're getting ready to do it, but these rates that they've been the market's been jacking up, have been slow to hit the market, if not at all, but they will hit the economy, and in time that will hit the market because of earnings. But we'll see. It's been a non-issue thus far. We see the Dow strong. Now that can be a bearish indicator too, because many of these mutual funds, a lot of these charter funds, they have to be in the market. They're by charter. So they might get out of Apple. They might get out of some of the high risk stuff, but they got to put their money someplace, and they might run into the Dow as a place to park money, like Walmart, like Boeing, just to park it. So they're meeting the charter that they have to be in the market. See, we don't have to be in the market. We have a huge advantage. They do. In the end, if we do get into a bearish run, they'll get them all. But it is interesting to me that we got the Russell weak, the Dow strong, the one that's not cooperating. Of course, the ES is still running, is the short VIX. No fear right now. So we want to watch that. If we can get the 5-minute VIX to come up and get along itself, then we could see a sell down. That's all we're looking for, right? We don't get too hung intraday. We're not so that'll probably be the last thing I say about interest rates or the Fed or any of that. We're not really concerned intraday with any of that. We're just interested in the money flow and extracting our share, which is nice. It's actually liberating. You don't have to concern yourself with it. We don't think. Okay, so now we can see the Nasdaq is now getting in gear, and the Dow has been very strong, and the ES is also, maybe it's gonna push up 45 points. That'd be the 1% expected move for today. And notice the Russell now is trying to get long against the short, so they're bidding this up. I'm reminded of a very famous strategy. It's public. It's been out there for years, for decades, and the strategy goes like this: you buy the S&P on either Thursday afternoon or sometime on Friday, and dump it on Monday mornings, sometime on Monday morning, Monday afternoon. And this strategy has been around for decades. It became public, and then it kind of stopped working. It was written about in a magazine or two. This goes back years. And then it kind of fell out of fashion, and then it kind of came back. What is it about? It's the idea that the street, Wall Street, the nice guys that they are, they know that on Mondays and Tuesdays, the 401k money from everybody working is flowing into the market. So let's buy the market at the end of the week, especially when it's been hit, and then we'll mark it up and sell all the crap paper and stuff it into everyone's 401ks. Nice guys. The percentage return, if you do a Google search on this strategy, the percentage return versus buy and hold is absolutely remarkable, like over like a 30-year period. So now I wouldn't, I wouldn't want to do it with a huge block of money myself. Because there's always the possibility anything can happen when the markets are closed. But if one was to put a little marker down and a little toehold on such a strategy, doing it with a defined risk option, buying a call option on Thursday or Friday for the following Friday on the S&P, it might be an interesting thing, to see and track what you do, and just define your risk. Now, I'm not suggesting anybody take this, but it's not every 5 minutes that we see the NQ and the 5 minute go long or short. And so let's just highlight this and we'll see. We'll see how it plays out. Now, those of you that are watching on YouTube, if you're trying to trade this, I don't think you should try. I don't. It's not why we're doing this. We're just trying to create a little awareness how we approach it. There is a skill set involved here, and we can see a chart in addition to the swing machine, and our members know how to set stops and been schooled in it. But I do want to bring it into view, and the danger or the mistake that folks could be doing if you are trying to trade this on YouTube is to be trading the money. I could come in and do something like this. I don't, but I could, and that is just block it out. We never we in the beginning we never had the money column. We just had the tool. And so if you find yourself on YouTube watching the money, that could be part of the problem. If you're trading, you really want to try to get your trading off the money. And our strategy still has not fired along. And it's still hanging on to the short from earlier today where we took profit. So we sit and we wait. You can see this NASDAQ almost seems to be sitting on the head of a pen here at this 15, 4, 418, 415, 415 to 420. She's oscillating back and forth here. So be careful. Let's take a look at that Dow on a daily. Where is that thing exactly? Oh, shoot. Can I click on it? It's down here. I'm sorry. Oh, let's see. Maybe I can do this one. I'll just put this on a daily. There it is the daily. You just want to see. Okay. The Dow is just in the middle of the range. It's not in euphoria. So it's just been a little dead cat bounce in our view. Sorry, Gracie. She don't like that phrase. Okay, now I'm keeping a casual eye. I'm about to try to do something that we don't do that often off of Swing Machine, but if we find the 1, 3, 5, all three of them in panic sell, I might try to come in with a counter trade. It was there for what was it, 10 minutes ago. It was there very, very briefly. So if I'm going to take a counter trade long against the short, I'd like to see the 5 get into panic, the 3 in the panic. I'd love to see even the 1. And then as soon as the 1 starts to lift up out of it a little bit, I would want to try to buy it. May not get that shot though. But it appears to me that that certainly the Nasdaq, I've been watching it with y'all, is weak to the other markets, but doesn't really seem to want to break much further down. VIX is nowhere's, no fear still. So we'll see if I do put the trade on, and it goes in up here, I'll let you know that I put it on. Otherwise, it'll be the robot. I just think that I can probably do a little bit better here. So if I see it, I'll let you know, and I'll try to pick it off. Yeah, it looks like I may have missed that opportunity. She's kind of running here. Otherwise, we'll leave it to the machine. So that's where, when you're trading mechanically, calls for all your focus, and you can only do that for so many hours in a given day. It's pretty difficult to do. Um, you know, you just don't even want to fly a plane, right? You don't want to fly a plane for 10 hours a day, 10 hours a day. I mean, you got to pace yourself if you're going to trade like that. If you're using a machine, it's a lot easier, we think. Okay, so if I'm going to take a counter trade, um, and I'm going to have to exercise a pretty tight stop. So it'll be on the NQ. and not suggesting anybody do this. Okay, there they are. They're panic selling it here. So let's let that run its course, and I'll step in and with a relatively tight stop. It's not something you want to do day in and day out. Okay, so that trade I took manually. I had the 5 minute in panic. I had the 1 minute in panic 3. Now, and it's a little nervy to do because it could continue to panic. It could panic out. It's a counter trend trade. And if I'm going to counter trend, I've got to be very, very disciplined on the stop. I'm playing for the bounce back up, and it'll be just a scalp. So the machine didn't do it. I did it. The machine's still there. The machine's far from going long. So I wanted to get in here and see if I could pick off a trade. And I'm using this side of swing machine. So she's still down in here. And if I can just get a move back up to, 13,369, it'll pay. Right. So my trigger was I got the 5 minute, had the 5 minute in panic, I had the 3 minute panic, I had the 1 minute there forever, very, very quickly. Again, it could have gotten worse. It still could, right? It could get a lot worse. So I've got to make sure that I don't on a trade like this, I don't want to risk much more than, $200, $300. That's about it. It's a counter trade. The trend is still down. Okay, so I don't trust myself because I'm doing other things, and I want to make darn sure that this trade does not turn into a losing trade at this point. I was only going to risk 300. I'm now up 300. So I went in and I set a stop, a sell stop that in essence will pay me 25 bucks if it comes back. And I'm fine with that. And I'm going to let it run. Now, what I got to be careful of is the strategy. If the strategy fires long, then I'd have 2 contracts, and I don't want that. So I'll come out of this. But so this was a counter trade that I took off of Swing Machine using this side of Swing Machine. If you're going to do this sort of thing, you really have to practice. You have to know if you're countering, the trend is going to be down. This is going to be all red, and you're playing for the bounce. But if it continues, you've got to have a stop loss in place, ideally on a chart. So, and you can do the same over in here. It's not something I want to do every single day, every single trade, but it has its place. This trade is guaranteed. You see the asterisk beside the 3 up there, NQU23, and there's an asterisk. That means I have a stop there. So if this comes back, it starts to sell off again, I'll make $25. I'm okay with that because I think that if I fortunate enough, if I can catch the counter move back up, I might do much better than that. So I think it's worth a shot. And at this point, it's a free trade. It's a guaranteed winner. If this was a Friday morning, I would have taken the 3 or 400. It's Monday. So you know what? I'll take this. What I mean by knowing where I am on the it's early in the round. So I'll take a little more, a little more risk, a little more, I'll be a little more patient. It might come back and I only make 25 bucks. It isn't going to bother me. But again, if it was Friday and it was the end of the week and I had my number and I'm just looking to put a little frosting on the cake, I'd be like, you know what, let's take that 285. Boom, just take it, right? But I'm not going to here, because if I can catch a little midday, they just don't want to take that NASDAQ down any further. I might just be able to catch a nice counter move. I could take, if that 5-minute could come back up to 15,390, there'd be 20, 30 points. That'd be, almost $1,000. But that's why I took it, right? It was a counter trade. So you can use Swing Machine to trade in the direction of the trend. You can use it for counter trend trading. You really have to practice it. You're on YouTube, you're on delay. You're 60 seconds, 30, 40 seconds behind. I wouldn't suggest you do this. It's not why we're showing this. We're not trying to suggest anybody be trading with us or trading it. We're just trying to show you and give you an opportunity to ask any questions. That's all. Just creating a little awareness as to who we are and how we go about it. The Swing Machine isn't the only tool that we use. We have dozens of other tools and charts and, a whole host of things, right? If you have any questions, let us know. If your trading goal is $100 a day, and you pick off that trade, I mean, okay, then do you have the patience? Do you have the discipline to take the next 3 days off, or take the rest of the week off if that's your goal? You'll need to. When you're that patient and that disciplined, and you have to take the next few days off because you hit your goal, what'll happen is when you come back to trading, you'll end up being more patient. You'll say, man, I put that trade on and I made my goal for 3 days and I had to sit out for 3 days, and man, there were so many other opportunities. So what happens is you wind up becoming more patient the more you do it. It's crazy. But you don't want to be in here, like with a box of ice cream. Not that I've eaten a whole box of it, kind of have, but and just keep eating and eating. Okay, so look what the 1 minute is done, right? So the 1 minute was here. It was only for a fraction of a minute. They were all three in there, and then she comes roaring right back to the midline. Now it could be, if the 1 minute was ever to get out there, and the 3 minute was to get out there. I mean, the 5 minute, that if it ever did that on the 5 minute, I mean, that'd be a big, big trade. But I could use that as an excuse to say, hey, it was a counter trade, and maybe you would. Susan probably would, and say, hey, you know what? You were all in there, Don, and you're back to the midline, the mean. Maybe you should take that $170, that wherever it is. But I'm gonna stay a little bit longer. It's a guaranteed winner, though. It's a free trade. So I can put any number of these on. during the course of the week. I mean, the counter trend trades are much, much more frequent than trends, right? That's where you can, grow to like chop. A lot of times folks will say you don't want to be in chop. I get that, especially if you're trying to capture a trend. But if the market is choppy, then let's counter trend them. And they just took us out. Okay. Even though I didn't get down into panic, though, so we made 25 bucks on the trade. No biggie, right? Now I'm not going to beat myself up. Oh, I could have made 500. I'm just not going to do that. It was a conscious decision. But notice, I mean, I got stopped and I'm still not even. So we could go even much lower than where I come in. I just kind of watch. Maybe we pick it off again, maybe not. So we'll just let it do its thing. I'm not going to do it all day like that. That can get a little tiring. But I just wanted to demonstrate a lot of different ways to use Swing Machine. And now the markets have moved right back into the middle of the range on this 135. You can see it's just moved right back in the middle. We don't play in the middle once the strategy goes off. But it's too bad we just missed. We just got tagged. Otherwise, that would have been a big fat counter trade. But that's okay. And I would rather on a counter trade, I would rather, all things being equal, I'd rather probably counter trade along. Generally speaking, generally, most of the time, 70-80% of the time. There are reasons for that, but we'll see if the strategy can pick up. Now the strategy is interested in a trend, so gonna have to do more than this. We have had between the strategy and my little trade. Let's go get a performance report. We have done, well, actually, we've made money on every single trade. So we've had 3 trades, 100% winners. So we don't have a profit factor yet, other than the commissions, which make it pretty extreme. You're looking at about about $3 a trade. You'll get about $10. Yeah, what's that? 10 into 1,000. Profit factor of 100. That works. The profit factor just keeps us balanced. We know, that we don't score ourselves on the money. We score ourselves on the profit factor. That'll tell us, that we're doing okay. If you don't know what a profit factor is, then that's a problem, because you're probably keeping score by the money. And we have talked to traders all the time. We get phone calls from folks, and they've been trading for 10 years and they've never even heard of profit factor. It's a total, and it's a shame, because they don't know what they don't know. And it's much easier to, and yeah, this thing's stepping up now. Much easier to create a good habit, as they say in it, but it's much more difficult to break bad habits. And if you've been ingrained or have ingrained a bad golf swing, it's hard to change that. And if you've ingrained, following the money, trading every single trade, the money, boy, you have to work really, really hard to stop that. With Susan, I had to experiment a little bit, and that was taking away her position window, so she couldn't see it. Maybe like a pilot, what they call flying under the hood, so they can't see the horizon. They got to focus, just on the instruments, right? So you take away if your balance on any one trade is the horizon, let's just take it away. So you focus on what you need to focus and not the money. Susan asked me the other day, Donnie, when we win the 2 billion, are you still going to trade? I hope you're all playing the lotto. I know the probabilities are a little bit extreme, 1 in 300 million, ridiculous, right? But somebody's got to win. And it's a nice fantasy, isn't it? 2 billion. I think, I'd probably trade differently, but I would probably still trade. I probably still would. It would be a hoot. I think it's going to come in at about 1.6 billion. It's kind of crazy to think, right? If you probably won't clear a billion, probably clear 700 or 800 million, but even at a 5%, you're looking at about what, 35, 40 million in perpetuity. That's some generational wealth. The fellow that was out in California that hit it for 2 billion, he was only 32, 33 years old. He was a real estate guy, and he hit it. So you never know. Seems ridiculous, doesn't it? You get up the next morning, you look at 6 lousy little numbers, say, how hard can that be? But it's the mega. So if you guys haven't played it, yeah, it's $2. I think it's worth, yeah, $2. Why not? So again, the trade that we put on, maybe I should just kind of mark it up here. What we did was we waited for the NQ to get into this box. And in here on all three, 1, 2, 3. Now when it happens, when they are all in here, the trend will most definitely be down and trending down. It's very hard to do. But what I like to do is I'll just wait. I'll see them all three in here, and then I'll just wait for the 1 minute, just to give me a little bit of movement this way, just a little bit. And then what I do is I get long. I buy it. I get long. But I got to have a tight stop, and I only want to risk, $250, $300. That's about the cost. That's about it. You got to have a tight stop on your ordering system or on your chart. And I want to play for the counter move back up. If I'm going to go the other way, I'd be looking, these would be counter trends off of Swing Machine. I want, the 5-minute in here. I want this one up here, and I want this one in here, and then just the start back. And same thing, if you do fade it, it gets short. You got to make sure that if it keeps running, to stop out and risk, a relatively small amount. You don't want to get carried away by the trend. So this is where I like to do the counter trend, if I'm going to do a counter trend, and I'm going to do it mechanically, visually off of the radar. I might have a glimpse of a chart. I didn't in this one. I just did it, and you'd want to practice that. It's not something I'd want to do all day, every day. It'd be a little too tiring. They're too frequent. But you can do okay. You really can. And if I'm going to do 10 of them, not in a day, but over a period of time, I probably want 7 or 8 of them to be on this side. Green side. Actually, that should be green, red. I'd rather do them here than over here. It's just a little bias. I want to go, with the bias. Sound okay? All right. So we'll clear all that writing. We can trade Swing Machine robotically. We can trade it the 1 and the 5. We can trade the 1, 3, 5. We will soon be able to trade not just the 1, 3, 5, but also what is the VIX doing? And if the VIX is doing XYZ, then we will do ABC on this sort of thing. But we also can run hedges. We can be going long the 5-minute and then short the 1 minute and maybe use micros. That we can do. in a very short order before the week is out, what we want to be able to do is have the machine trade the 5 minute long or short, and then know that and trade the 1 minute in the opposite direction. We will set that up. It's a hedging approach. There's reasons for hedging. It smooths out, should smooth out the account value. And we'll try to demonstrate that. That is definitely something that has to be practiced and understood. Yeah, what a shame that we missed that counter. What a bugger, huh? That was a bad one. They went down and got us. So that would have been, you know, that trade would have been, well up over $1,000. So any case, but that's where we, got it. So we're okay. If the next trade, now I'm not going to put it on. I'm certainly not going to put it on in here. That would be, for me, I'm not going to do it. There's nothing in here that I could do, but the strategy might very well try to catch the trend. So the strategy has had 2 trades and we had 1 for $25. Strategy has done much better. And that's where we are since 6 o'clock last night. We're at 997. All 3 trades are winning. We calculate our commissions. 3 trades is $9. So we'll call it $10, $1,000 in gross profit divided by $10 in commissions is a profit factor of 100. That works, right? That works. That means we're making $10, and it's going to change, right? We put on more trades, it'll come down to earth a little bit, but it's nice to know that for the time we've been trading thus far this week, we're making $10 for every dollar we have put on. So I don't, need anybody to grade me, or I know what I'm doing. I know where my score is. I think it's really important when you're trading, if you have a spouse or a partner and you're working and you're doing your thing, they may or may not know what it is you're doing. They may just see it. They probably will just see it for the money. I think it's really important that we say to our members, that hopefully you know what you're doing. If you don't, then neither you know what you're doing. But we say to our members, make sure your spouse or your partner has an appreciation for, what we're doing, because it is very mechanical. They may not see it as such, and it can be in the beginning very exhausting. I'm not burning, my eyes are not, yours might be burning a hole on the screen. I'm not. I'm doing other things. I can look at it at a glance. But now Susan knows, right? Because she's a trader in her own right. But prior to her, she might come to the door and not, if she didn't understand and, think that I'm not doing anything. Probably still thinks, no, she knows. But, so a partner or spouse may not, may see you just sitting there and thinking, oh, he's not working. He's just, what's he doing? He's just flying things around. But so I think it's important that they know. That's all. You don't have to make them a trader necessarily, although I think the girls, if we're talking girls, I think make better traders. They're more disciplined generally. They're more patient, and they seem a little risk averse, little less risky. So you can see that the Dow here has had a hell of a day, but I don't want to do it just to do it. We got a good score going, but you can see the 5 minute is now up here, and the 3 minute, if it did get up in here, it could continue. But boy, if you were ever thinking of fading, on an intraday basis, that might be the place, to come in and fade it. But again, would be on the short side. You're going to have a greater degree of excess if you focus on this side. Just, now I look at, gold down in here, if gold ever got down in here, I'd be real comfortable, trying to get long on an intraday. So if I see it, I'll call it out. This screen that you're looking at is a beautiful fit. Our screen, it's a flat screen, and it's a perfect 32 inches. It actually measures 32. I know sometimes they give you the diagonal length and they come in a little shorter, but this is a full 32 inches across, and it's about, I think about 13 and a half inches high, 14 inches. It's a beautiful view. And it is a flat screen. We have members that have the curved. I just opted not to do it because it's kind of like a spreadsheet. And then it ended up standardizing all of our screens, all of Susan's screens, all of my screens are the same dimension. And it really is a beautiful view. I know that if you're watching on YouTube, one, your definition isn't that great. You probably have to increase the setting, and it's probably at a much smaller screen, but it is when it's sitting on your desktop, it's really, really pretty. Okay, so we can see the ES. So get the ES push up into, now this is on a 135, right? It's not a daily euphoria, but it is on an intraday. So it's really pushing up here. I'd like to see that 5-minute get up there. There's the 1 minute. I want that 5 to get up. If they all three of them get up in there, if I see it, maybe we do try to demonstrate a little counter trend back. I think I'd rather do it with the ES than the NQ. And I'd rather do it with the ES than the Dow. The Russell is some distance away. So if I see it set up, in order for me, I'm not going to do it here. I need that 5-minute up in there. And ideally, I want the other two up in there too. Then what am I going to do? I'd sell it with a relatively tight stop. I'm only going to risk, a couple $100, 200, 250, something like that. And see if I can just get a pullback and make a couple bucks and get out. So counter trend trading, the characteristics of a counter trend trader, their trades are frequent. They pay a little bit. They are usually going against the flow. So you got to be a bit of a contrarian thinker, a little. And they only pay a little bit. Whereas a trend trader, they're less frequent. So you got to be more patient to get the trend. They pay more, and the winning win nearly as much. That's why if you're trying to capture trends and you're tracking the money and you start clipping the coupon, clipping the money, then you're never going to be a trend trader, and you're just going to be hurting yourself. You need to know what type of trade one is putting on. So we can see the ES even on the 5 minutes starting to, push up, but I really want it up in there. I want it like this, the Dow. I just, we could even fade the Dow up here at 35,519. I'd want to be a seller of it. But let's see if we can get the ES. I think we'd make our money quicker. Notice too look where the VIX is, right? They're panic selling the VIX. So the market, in my interpretation, on an intraday basis, is just a little too rich right now. So I'm starting to think that I'd like to go after one of them here. I won't go after the NASDAQ. I'm going to give that some, I don't want to fade that one, but maybe we go after the ES. So bear with me. Okay, I'm going to come in and I'm going to manually sell the ES. The reason why maybe a little bit early here. The ES we're pushing, we're trying to get up into euphoria. It's a little struggling, and on a 5-minute level now, not a daily, 5-minute. And the VIX, we have the VIX in panic sell. So I'm playing for just a pullback, back down to 45.20. We're playing for a handful of points. That's all. And I don't want to get carried out. So it'll be a relatively, they're frequent trades, they're small, and you usually have to have a high winning percentage. I don't want to give too much back. So I'm going to go ahead and get hopefully a stop loaded on this. We are going to get a stop loaded on this, so I don't lose control of this thing. Okay, so we've set a stop, and as you can see, I'm risking $175. That's it. That's it. And ideally, this thing comes back in. If we get up 175, I'll tighten up the stop to a break even or a little bit more to cover the cost of the trade. But we're not going to risk any more than that. On counter trades, you just cannot risk. They're too frequent, and you don't want to be risking too much. The VIX has picked up ever so slightly, just a little bit. We need the VIX to move that way. That'll bring the S&P down ever so slightly. We're playing for smalls. We know that, right? We're playing for a small amount. We're risking 175 bucks. If I make 175, that would be great. That would be great. We're not coming in here and saying that this is the intraday top and we're going to sell off here. I don't have any visualization of that right now. It's possible, but that's always the seductiveness of a counter trend trade, because every trend starts with a counter, but not every counter turns into a trend. So if your first experience with trading is, you put on a counter and you happen to catch a trend, and then you spend the rest of your trading career trying to pick tops and pick bottoms, not realizing, your counter trend trading, you're probably gonna get hurt. Okay. I have a back scratcher, and I made the mistake of introducing it to Ted. He's our 3-year-old golden, so he'll roll in here mid-morning, mid-afternoon. He sits up on his on his butt on the desk. Get that back scratcher working. Probably shouldn't have done that. Yeah, now max risk here on this trade, that little asterisk means, so 175. It's a counter trend. I know the trend is up. I see the green that you see. So the reason why we played it was we were on the ES, we were pushing, we weren't quite, the 5-minute wasn't quite in there, so I'm a little early. And then the VIX was down in here, so I was a little tempted to say, you know what, maybe we can try to play it in here. It's been up, much of the morning, thinking maybe we catch a little early afternoon sell off. Maybe I pick up 175, couple $100 on the counter and get the hell out. The strategy is still running HFT2, but it has not triggered along yet. Let's just double check it. No, it has not. So just know that about your counter trend trading. And you just want to be careful that you, again, don't overdo it. We don't usually even demonstrate them because they're, so seductive. Just to critique ourselves, remember when the Dow would have been, would have picked up some points. Remember, it was up in here. All three of them were there, and then now she's pulling in. She's digesting that. So we could have made a couple bucks. Now I can see here on Swing Machine, as far as the trend, it is dipping, and so that's good, right? I'm short, so I'd like to see it dip. I'm not thinking that it's going to roll down. I'm not, but if it did, that'd be sweet. I wasn't planning on that. Of the four markets, the most stable market, they're all very liquid. The most stable in terms of the indices is going to be the ES. The crazy aunt in the basement is going to be the NASDAQ, going to fly up and down all over the place. Really, you may not want to trade it every single day. The Dow is pretty staid. You can tell, I mean, it's been up, 100, 200, 300 points. It's just pretty, I don't usually trade the Dow that much. Susan does, but and then the Russell uses the least amount of margin, and so you can see the monies are not quite as much, and but it's fine. It's fine to trade. The other markets, gold, oil, nat gas, those other markets, they currencies, they're probably going to trend much better than the indices. So if I'm risking, I was originally risking $175. If I get up 175, I'll come in and set a break-even stop. So I won't continue to risk 175 once I'm up 175. I'll tighten it up. You can see the ES now on the 1 minute he gave up the ghost and came back. And we're just trying to, we're not trying to make a killing here. I wasn't trying to, again, trying to say that, this thing's going to crap out. It's possible, it's possible, but and if a person wanted to go up and grab the 112 bucks, 125 bucks, okay. Could you do, how many times a day could you do that? If your goal is $100 a day, do you have the patience to sit and wait and just wait for them and then just put on one and eat one potato chip and then go do something else? I don't know. If you think I'm thinking about, or any other traders thinking about inflation, deflation, or all that other garbage on CNBC when they're executing trades, it's just not the case. No one is thinking about that. And in fact, most of all the trading that you're seeing done here is being done by machine, and they're not thinking. We thank you for stopping by. If I take that trade off, I'll let you know. You're welcome to visit the site, the website. We've been here a long time, not 6 months, not 6 years. We've been here a long time, long before there was Twitter. Do little to know it. We've sampled a little bit of advertising for the first time, just a little. And we're a mentoring site. We'll help you to help develop your trading to a point where you become more mechanical, more robotic, start looking and exploring areas of hedging. And we'll provide you, our annual members will provide you our tools. We do not make specific recommendations to buy or sell anything. We are not making suggestion that everybody should do this. I'm not. It's got to be something you really want to do. Got to have the time to do it. To do mechanical trading like this and visual trading, you really need to have, some time and have a quiet place. I don't have to work for the man anymore. I understand how frustrating it can be. I remember one time, I had a guy that, he was just constantly on conference calls and be like, God, can he just leave me alone? I just want to trade, you know. So having those kinds of pressures, distractions can hurt your trading. But if you have the time and you don't have that, or you have a block of time that you can avoid those sorts of distractions, of course, being able to use the trading robots can help free you up, but you still need to have good mechanical skill. And the reason for that is if you don't have good mechanical skill, if you don't have the ability to come in and do it yourself, if the robot struggles, it'll put more pressure on you and you'll have a harder time. But if you know that if the robot struggles for whatever reason, that you have the skill set to come in and restore your account and get the money back, it makes your trading much stronger. It's just that mechanically trading like this, we waited for something very specific to put that ES on, and you can, try once, patience and focus, right? It can be tiring. It is tiring when you doing that. It would be like flying, coast to coast, day after day after day. That'd be a hard way to go. Okay, so I'm going to come in on the ES if you don't mind, and I'm gonna tighten up my stop in here because I'm I'm getting a little tired with it, and so I'm going to hopefully set this. I'm going to use the TradeStation matrix, and once again I've got it set, so I'm guaranteed. See the little asterisk? I'm guaranteed to make $25 on that trade. Now we're not ordinarily trading for 25 bucks. I'm just controlling my risk here. And if you're doing that, I'm forcing the market. I'm forcing the market to pitch to me. Now, chances are the likelihood is this thing's going to bounce back up and I'm going to get tagged out for 25 bucks. And then of course it'll go down and crap out, just like what the ES did on, or the NQ did on the long side. But if you continue to trade in that fashion and you're patient and you're disciplined, you're forcing the market to pitch to you. So it's like playing baseball. You foul one off, you foul one off, you foul one off. You're not getting a hit, you're not getting on base, but you're forcing the pitcher to pitch to you. And every once in a while during the course of a week, you're going, and it could happen on this one. I don't know. I mean, suddenly the market, the VIX spikes up, the market turns down, and suddenly, boom, we're up $1,000. Home run ball, boom, over the fence. Thank you very much. And out we go. That sort of approach. I equate it to sports because I like sports. It's fun. It's competitive. We don't have to win at this. We're not going to win or beat the market, but we just got to play an effective game. So there is a game to baseball. There is a game to golf. There's a game to, whatever, most things. It's more fun, isn't it? I hope. All right. So there's the 175. So beautiful. I feel pretty good about that. And now we're just going to let it run. Now, I jokingly, and Susan's totally fine with this, right? Susie, if she put that trade on, she's probably taking it 200 bucks. You're gonna take that, she's gonna say, well, you know what? The 1 minute is in the panic and I'm down in here and I was risking 175. I've just made 100%, on a risk reward. I'm taking it. It's okay to do that. That's her style. That's her trading personality. It's okay. I just lean on people during the Q school to be more patient and to really, try to sit on the hands. That's all. For Susan and I, it works really well because if draw another analogy, like a best ball tournament in golf, Susan may not hit the ball really far, but she's going to keep the ball in play. And it enables me, and comforts me to know that then I can play it a little bit looser. I don't have any concerns for her, her ball is going to be, probably down the middle. How you doing there, Teddy? Well, boy, it's hot. It's still hot as blazes down here. So we got a guaranteed winner. I'll shut up. If you got any questions, let us know. And we'll let you watch. And we just got tagged. So no problem. That would bother Susan, right? She would be thinking, she's focused on that. She'd be thinking, hey, I had 200 and I let it come all the way back. So we don't fight that any longer. We let, I don't fight with anyone's trading personality. I just try to make it everybody aware and then let you, play accordingly. But I think it's best to be a little bit more relaxed. If you're not probably trading too big, too little too much margin. And the good news is with futures, you can now trade micros, which are a fraction of the size. And you can reduce it. You just gotta be careful that you don't reduce the leverage so much that you become a sloppy trader. Like, oh, that's only $30 when a mini would be 300. So you got to be careful with that too, to reach a happy medium. But if you have other responsibilities, if you get a trade on and it's 12:27 and at 1 o'clock you get a conference call that you got to be on, probably not a good idea. There's enough stress in the market as is. You really, I would suggest not do that to yourself. It isn't worth it. And the market doesn't know that you got a conference call, and it doesn't care that you get a conference call. And this guy used to drive me nuts. He was a nice enough guy, but it was the last of my, at the end of my official career, which was in surgery. And this dude just loved to have conference calls. He'd have conference calls about conference calls. I never saw anything like it in my life. It was so counterproductive, man alive. With no appreciation. We're on the road and his butt was sitting in a home office. I'm like, man, but in any case, don't miss that. Nice thing about trading, don't have to travel. If you do travel and you want to take it with you, you can. Not a whole lot of paperwork. We do keep track of our trades. There is some in there, but not a whole lot. No conference calls. You are your own boss. You don't have to rent a storefront. You don't have to hire employees. Beautiful thing. I should remind everybody, we just have 2 levels of membership. Monthlies are unlimited. We'll give everybody who comes in as a monthly a hall pass to spend a day with us on Zoom. Well, we'll give you an intro for an hour and then let you spend the rest of the day. We'll spend all day going through everything, but we'll give you an intro. If you want to become an annual member, you must go through what we call a Q school, and those memberships, you know, they annuals are limited. They are limited. And if you do go into the Q school, you're guaranteed a spot to become an annual member if you want to, but you don't have to sign up for the annual until you completed your Q school and you feel comfortable with what you're about to do. We think it's a good way to go. It slows everything down. We think that's good. It's worked out well. And that's the way we do it. If you have an interest, though, definitely call us. We'll work around your schedule, but we schedule these Q schools weeks and sometimes months out in advance. So don't assume necessarily that you know, that we can immediately start, or you know, we schedule. So I think it's a good idea that we chat, make sure that you're comfortable with what you can see this market coming back in a little bit, right? Keeps pushing out. It's really range bound, right? We're going from one side to the other to the other, you know, so this can be a great tool. We'll try to do more of this here. I don't see anything in here now. I don't see any intraday extreme yet. You can see that, you know, that when that VIX was in panic, that was probably a pretty good time. But last year we stopped issuing annual licenses around November. I think it was around November 1, I think it was. We're probably going to be in the same place. You know, so don't and I can almost promise you that this fall election year is going to be very volatile, and we love volatility. By the way, we've had 4 trades since 6 o'clock last night, and all 4 winners. We're up 1,020, $3 round trip on a trade. So we've spent 12 or 15 bucks in commissions. That's our cost. Divide that gives you our profit factor. So the long trend is starting to come under pressure here a little bit. We can see it. Still pretty messy though, right? You can almost tell where. I set the settings to the HFT really wide. What I said earlier, did that deliberately last night. I didn't want it to overtrade, so it doesn't trade a lot. But when it gets on it, it'll give me ample opportunity to get, I hope, the fish in the boat. So she's still working from a short position from earlier, of which we scalped, and she's never gone long. I don't know what the market's going to do this afternoon, but if it does run up, the robot should get it. That would be on the NQ. Otherwise, she's just in a range and it isn't trading, and that's fine. You don't have to, don't necessarily equate. You cannot eliminate risk. Sometimes people think they got to trade like a lot, to, keep taking out the risk. You don't want to trade too much. And the machines can really, really help slow us down. And at 1 o'clock, we'll have to sign off on YouTube. We need the resources. So again, we're going to say thank you for stopping by. You have any questions, let us know, but we'll let you know in advance. At 1 o'clock, we'll need to turn down YouTube. Just make a note. Remember the Dow was at 35,505, right? There's 25 or 30 Dow points. That's about $150. And a little counter move off of that. That very well may be, it for the Dow. I'm starting to see a turn down. I'd like to see the VIX turn up. So the market is coming under pressure. You can see it. Okay, folks, looks like we're going to get ourselves a little rally here, maybe going into the afternoon. On YouTube, we want to say thanks for stopping by. Feel free to visit the site and ask us any questions, and we're ready when you are. Have fun.